Are you ready for a financial storm, or better yet, do you know how to profit from one? Picture this: millions of Americans are caught in the eye of a potential debt hurricane. When student loan payments restart, it will trigger a massive $167 billion increase in delinquent student debt. This could send shockwaves throughout the entire financial market. But here's the thing, in every crisis, there are winners and losers. By the end of this video, you will learn about 5 stocks that are poised to weather this storm and possibly give you impressive returns. Stay tuned if you want to be on the winning side when student loan defaults rise. Today, we're standing on the edge of a precipice. Our focus: the U.S. student loan market, a beast that has a belly full of uncertainties. But don't worry, we got our financial binoculars on, and we're all set to dissect this and help you find those golden investment nuggets. Right now, the U.S. student loan market sits at a crossroads. The post-pandemic calm we've enjoyed could either become the norm or be replaced by a storm that could drastically shake things up. Millions of American students are nervously biting their nails, awaiting what will happen with Biden administration's plan to alleviate student debt. Can you imagine this? This plan aims to cancel up to $20,000 of student loans for Pell Grant recipients and up to $10,000 for other low-income borrowers. Now, here's where the numbers start looking like something out of a science fiction novel. The scale of debt forgiveness that Biden is considering, it's massive. It would be an estimated public cost of a whopping $400 billion. This would easily earn a place among the most expensive executive actions in U.S. history. Yeah, you heard that right. Let's dive a bit deeper into this issue and bring in some hard data. Now, I know the term data can sound a bit daunting to some of you, but trust me, it's like coffee, a little bitter at first, but absolutely crucial to kickstart our day, or in our case, our investment journey. So let's sip on some numbers. According to a research note by Bank of America, the share of student loan balances categorized as seriously delinquent fell dramatically from 11.1% in the fourth quarter of 2019 to a mere 0.7% in the first quarter of 2023. Now, that's what I call a plunge. But don't get too comfortable just yet. With federal student loan repayments set to resume soon, delinquency rates are expected to shoot back up. If we consider a scenario where loan payments resume in full, it's fair to say that student loan delinquencies could return to pre-pandemic levels. As the economist Ethan Harris and his team said in their note, this would be a sizable shock, and it would probably have knock-on effects to other categories of debt as well. Now, I don't know about you, but a $167 billion shock isn't something I take lightly. But remember, every cloud has a silver lining, or in our case, a golden investment opportunity. So let's make some lemonade out of these lemons, shall we? Alright, before we dive into these fascinating stocks, let's test your financial trivia prowess. Here's the question for you. What was the total amount of student loan debt in the United States at the end of 2022? Was it A, approximately $1.2 trillion, B, approximately $1.5 trillion, C, approximately $1.7 trillion, or D, more than $2 trillion? Think it over and let us know your answers in the comments. Now let's embark on a fascinating journey into the financial landscape. We'll be examining 5 key players that are poised to move in the face of this potential student loan crisis. These companies might just turn a looming problem into a goldmine of opportunities for sharp-eyed investors like yourselves. First up is Sofi Technologies, Incorporated, or SOFI. Sofi, short for Social Finance, is an innovative fintech company that offers a variety of financial products, including student loan refinancing. If there's a surge in student loan defaults, more people might turn to companies like Sofi to find a solution. That could lead to a potential increase in Sofi's customer base, and in turn, its profitability. Our next contender is Navient Corp, or NAVI. Navient services and collects student loan payments on behalf of various lenders and investors. With the resumption of federal student loan repayments, Navient's role could become even more crucial. Then we have Discover Financial Services, or DFS. You might recognize Discover for its credit card services, but it also has a significant presence in the private student loans market. As federal relief potentially diminishes, Discover's role could become more significant as students look for private funding options, providing a potential boost to Discover's bottom line. Moving forward, let's talk about Nelnet, Incorporated, or NNI. Nelnet, a diversified education services company, provides student loan services among other educational products. Any changes in the student loan landscape could directly affect Nelnet's operations. Lastly, we have SLM Corp or SLM, commonly known as Sallie Mae. As a prominent provider of student loans, Sallie Mae could see an uptick in business if more students turn to private loans. But remember, increased business could also mean increased risk in the face of potential defaults. These are the 5 stocks to watch as we navigate the upcoming potential storm in the student loan market. Each one could react differently, offering diverse investment opportunities for those who know where to look. Keep watching and I will share why these stocks can be a true golden goose. Hey, why not take a second and like this video and subscribe to our channel? We are always discussing essential topics that can help you navigate the financial markets. And don't forget to check out the description box for valuable resources. Alright, let's dive a little deeper into why these 5 stocks are particularly noteworthy in the context of the looming student loan crisis. Starting off with Sofi Technologies Incorporated. As a financial technology company, Sofi offers a multitude of services, with one of their primary offerings being student loan refinancing. If student loan defaults start to climb, we could see a rise in the number of students looking to refinance their loans, potentially boosting Sofi's bottom line. Moving on to Navient Corp, a company that functions as a student loan servicer. It handles, manages, and collects payments on student loans on behalf of various lenders and investors. Given their role, an increase in student loan delinquency rates could generate a substantial uptick in business. Definitely a company to keep on your radar. Now we have Discover Financial Services. You probably know them for their credit card services, but they also provide private student loans. If federal student loan repayments start causing distress, we might see a shift towards private student loans, which could be beneficial for Discover. Next up is Nelnet Incorporated. They're a diversified education services company, but importantly for our discussion, they offer student loan services. With their various educational offerings, they may have a strategic advantage in navigating any potential student debt crisis. Lastly, we have SLM Corp, more popularly known as Sallie Mae. As a leading provider of student loans and other financial services for higher education, they're deeply involved in the student loan ecosystem. As the landscape changes with a potential rise in student loan defaults, it's worth keeping an eye on how Sallie Mae responds. Remember, the stock market is a game of anticipation. Savvy investors make moves based on what they think is going to happen, not just what's happening right now. With the student loan situation about to shake things up, these companies could see some interesting activity. If the student loan forgiveness plan does not get anywhere, there will likely be a surge in student loan defaults due to the mandated resumption of federal student loan repayments. This might result in short-term losses for these companies due to the increase in delinquent accounts. Yet, the potential for a higher volume of loan repayments might eventually boost their profitability. Companies like Sofi and Discover Financial Services, which also have a diversified portfolio beyond student loans, may be somewhat cushioned against these shocks. Yet, they will still feel the ripple effects of any major disruptions in the student loan market. Remember, these potential scenarios are speculative based on the current situation, and the actual outcomes could vary. Hence, it's essential to monitor these developments closely and make informed decisions. The possible rise in student loan defaults represents a challenge, but for the keen investor, it also presents unique opportunities. Investing isn't just about riding the waves, it's about understanding the currents beneath. And hopefully with this video, you're now better equipped to navigate those currents. And there you have it, a rapid descent into the world of student loans, delinquency rates, and their impacts on some quite intriguing stocks. It's an intricate web, but it's in these complexities that we often find the most compelling investment opportunities. It's a wrap for us, but don't forget to check out our other amazing videos. Thank you for watching, and we will see you in the next video.